Hey everybody, this is Jose. We are about to start in around 30 seconds. I'd like to have a quick sound check, if that's okay. A quick message on the chat box, a quick hello from you or something like that would be good enough for me to know that you hear me. And therefore, we are ready to get started. So we got 15 seconds to go. I'm just gonna turn on the video stream as well so I can say hello as always from the bottom right corner of the screen. How are you, my friends? And again, just a few seconds to go. 1 and 0. Here we go. We are now live and ready to begin the session. Very good. Wonderful, guys. Thank you for this confirmation. How are you, Gary? It's good to see you. Good to see you all as you are joining the session. Today is November 19, 2020. Today is options with options. So we're going to be looking at different opportunities to execute options trades with AutoUFOs. Of course, options give you options you need. So we love to adapt to the current market conditions. Looking at whatever type of option strategy is more adequate given such market conditions, such as directional trades, non-directional trades, etc. As we always do, really, we always follow a process led by the market, meaning we adapt to what the market has to offer, and also led by the scanner, meaning that instead of looking for opportunities manually, we just click the run button on the TradeStation platform, execute a scanner, and then work on those specific symbols that come out after the scanning process. Okay, very good. So how are you, Paul? Good to see you as well. It's nice to have you all in the session, guys. So before we start, I just need to highlight the disclaimer for you. I'll highlight it word by word so you can read it word by word. So please read it carefully. This is important information. And as we complete the disclaimer, so we'll be ready to begin. Very nice. Very nice, everybody. Cool. Very good. Okay, so guys, time to get started. Let's begin. I'll close the presentation slide and we'll jump right into our TradeStation platform. As always, let's structure our session in, let's call it 3 parts. One part where we're going to look at what's happening in the market, and then the options, meaning the S&P and the VIX. From there, we'll be looking at trades that we have in place and see what's happening to such trades. And then number 3, we'll be looking at new opportunities, which is obviously the most interesting part of the session, even though the 2 prior parts, the current market conditions as well as the prior trades, are also certainly critical, especially if you are if you have any of those prior trades in your account and you have executed them. You may have questions when it comes to management or any observation that you had. Remember, options have multiple moving parts, so it is not black or white. It's not like when you buy a stock and it goes up by $1, you make $1. With options, it's not like that. So for the ones of you newer to trading options, you may have questions at times, and certainly I would love to see those questions typed in the chat box so I can work with you in an interactive manner and help you better. So please do not be shy and go ahead and type out any question that may pop in your mind. If we have a video that is a detailed video that answers this question, I will point at that. If the answer is coming later, I will point at that. But just make sure that you don't keep any of your questions to yourself, because it will be a bit of wasted time in the session, if you wish, given the fact that I'm here open and willing to help you guys. So any question, go ahead and type it. Very good. And also, as we begin, how are you, Jose Carlos? Very good to see you, my friend. We missed you. Very nice to see you. So as we begin the session, as I was saying, I'm always a bit forgetful when it comes to reminding you guys of hitting that thumbs up button and things like that, which is a classical practice in YouTube channels. Certainly appreciate it. If you guys appreciate what we do, that you go ahead and support us by clicking the thumbs up, subscribe, notification bell, and all those little buttons in the YouTube app or the YouTube website. Cool. Let's begin, guys. S&P. So what's happening on the S&P? Well, you can see that we have a collection of 3 red UFOs. Okay, we didn't have that for a long time. It was just going up, especially after the election. But it does seem that some sell on-field orders started showing up on the S&P, while we are now looking at the climate condition to be 12 out of what statistics would suggest to be 11. In other words, we are now surpassing, and we talked about this last week. So last week we said, okay, the market has room to keep going based on AutoClimate, based on the stats. But this week, what AutoClimate suggests is probably a change of climate, which could be, 3, 4, 5 days on the way down and then go back up and continue potentially making all times high and keep going. But certainly right now, being too focused on entering too many long trades may be a bit late to the party for the majority of stocks out there. And, even though we will be looking at the tab on the scanner where we have directional opportunities to go long, you will probably see that most of those opportunities, they show you 15 candles on the way up, 20 candles on the way up. So you'll probably see a lot of stocks that while they are in a defined directional move, they are, way too high. They move too far, too fast, for too long, and basically entering now is a bit too hopeful. Basically, we are late to the party, to the long side. Okay, in most cases. Now, for sure, we've seen cases, and for the ones of you that are new to the sessions, just keep in mind that old saying in Wall Street, which is that the market could remain irrational longer than your account could remain solvent. I believe this is more or less accurate the way I phrased it. And that's a pretty old school quote, but very relevant, really. And this is basically what we are discussing with AutoClimate. So statistics suggest 11 candles on the way up. It's achievable and a pretty normal thing. In the other hand, beyond 11, we start now falling into hopeful territory, something that based on probabilities is less likely to happen. And therefore, the more the market remains in an up climate, the more likely it will reverse. Okay, so careful out there. If you are very bullish and you want to enter many more trades, I would suggest, based on AutoClimate, to take it easy. Maybe wait for some sort of a retracement, change of climate to be read 3, 4, 5 days on the way down, and then go back up, see the blue again, and now it will be a much safer time to get back in to the long side. Okay. When it comes to options prices, of course, the VIX is a great indicator to understand the overall prices of options across the board. Of course, we don't take trades or trading decisions only because of the VIX. So there are many more things that we look, and the scanner really does the job for us. But really, it's interesting to see that you saw prior to the election we're hitting values of 38. Now the VIX is 23%. So certainly much, much lower. Okay, and that's why when we look at our scanner and we look at directional opportunities, okay, so you can see we got today, I run the scanner before the market open, as I always do. We got 27 opportunities to go long, potential opportunities to be confirmed. We only have 6 to go short. Why? Because the climate in the market is up. Okay, but also notice that while we have 20 plus or 30 to be buyer of options, debit strategies, when it comes to non-directional trades, which are credit, we only got 8. Where, a few weeks ago, when the VIX was 27, 28, the week before it was 30 plus, we got maybe 1, 2, 3 directional opportunities, okay, and we got like maybe 20 or 25 of the non-directional. In other words, you can see both from the VIX and as well as when running the scanner, that options are becoming cheaper, and therefore now we have less opportunities, potential opportunities to be confirmed looking at the chart, but we have less of those opportunities to be a seller of options and more of those opportunities to be a buyer of options, given the fact that options are becoming cheaper. Again, it doesn't mean that you can have all your eggs in one basket. It doesn't mean that let's go ahead and buy all the options we can. No, you want to have a diversified portfolio and always have some positions which are debit, as well as some positions which are credit, some positions that are non-directional, some positions that are directional, long and short, and have a diversified portfolio. My point is that in the recent times, it is easier to find trades to be directional than to find trades to be non-directional, where a few weeks ago it was the opposite. Okay, so just for you following the sessions in a regular basis, especially if you are doing this homework by yourself, where when the days, we are running the sessions on Thursday, isn't it? So the days where you are looking for trades by yourself, you may be like, how come Jose always find non-directional trades in recent times? Well, that's not the case anymore. Notice how the VIX went down. Notice how the scanner now is throwing opportunities which are more pointing at debit strategies instead of credit strategies. Okay, so just keep all of this in mind. because obviously it is very relevant. Okay, so you understand when you are doing your research, why is it that sometimes you find more of these opportunities or you find less of those other opportunities. Okay. Cool. Okay. So now trades that we have running. Okay. So first one is Merck. Okay. So this trade, we talked about it last week. This trade concludes tomorrow. This is a trade where we're using November 20 expiration. Let me go ahead and load Option Session Pro so we can look at this trade on the option chain as well. Remember, this was a trade that was an iron condor where we broke the range. We saw the climate very healthy pushing up. We saw the market ready to potentially start making all-time high. And we decided, 2 weeks ago we decided to convert this iron condor into an iron butterfly. Oh, sorry for that, guys. I just hit the wrong key there, the wrong button. Here we go. So we decided to convert this iron condor into an iron butterfly to reduce the risk of the trade. Since when we reached that point, okay, and look at the strength that was available at this time, it really looked like, and I don't mean to say it in a subjective manner, we had the auto climate pointing blue big time at the time, and it did look like it was going to, just keep going. So the action that we took was converting the iron condor into an iron butterfly, and that created a different range for profitability, which was that particular range. Okay. Now notice how currently the price is below the range, which is the range between the green lines. And what does that mean? Well, that means that if price ends up below the green line, into tomorrow's close, then this trade will be a losing trade. Okay. If price manages to go back up and anywhere between the green lines, so this trade will be profitable. But if price end up below tomorrow, we'll see that tomorrow. So then this trade would be a losing trade. Okay. Good news is that the loss was basically diminished by 2. Okay. The loss was diminished by 2. So the most this trade could lose is 102. Which is much less than the original risk that was more than double. Currently, this trade is losing 86. Okay, of course, because we are below the range. So again, we need to come back inside the range, and inside the range, okay, which is basically above 81 something. So then we're gonna be back inside of this triangle shape, which is the profitability area of this iron butterfly. Which has been the product of a conversion from iron condor to iron butterfly as a dynamic technique on how to attempt to solve the fact that this stock behave unexpectedly against probabilities and not respecting UFOs either. So again, what I said last week is that then you can do an adjustment to an adjustment. You can do damage control on top of damage control, but it becomes very complex. And since the nature of this group is quite diverse, where some of you are quite educated with options, but some of you are really brand new with options. So I think it's good enough as a demonstration, if you wish, to go from an iron condor to an iron butterfly. It's already a pretty advanced approach to management. And for the ones of you that are more advanced, this hopefully gives you ideas and other possibilities. And certainly, if you have any suggestion or question, you can certainly shoot an email to support@traddictiv.com, and we'll be happy to help you with your questions as well. Okay, guys? But in here in the session, I don't want to make it more complex. Okay? So we'll see what happens tomorrow. This trade obviously is looking like it's more likely going to end up as a loss than a profit, especially because of those red UFOs that are happening here. Okay? Again, we could apply other techniques to shave the risk a bit more, and again, probably end up with a loss, but instead of losing 102, maybe drop it down to $50 of risk or something like that. So again, we could keep working on damage control, but as I said, I'm not going to do it, okay? Just to not to overcomplicate and put my time into new trades. Roku, this is a trade that is working very well, talking about being directional. That stock is 7% up in one day. So, if you are in this trade, you are probably very, very happy. So this is a trade that we planned last Thursday. It was on the 12th. We did not hit our entry on the 12th. Okay, we did not. We hit the entry on the day after. So let me show you. If I show you the 12th, okay. So on the 12th, we said, oh, here we go. So on the 12th, we said if price, okay, comes to this UFO on the 12th, okay, which is when we were planning the trade, get in, and we set an entry point at 227. Notice, okay, how price went very close, but didn't get to touch the dotted line, didn't get to enter the UFO. Okay, that was on the 12. Okay, so you may say, okay, so we missed the trade. Well, no, because what happens is that on the 13, okay, which is the day after, notice how the reference value, our moving average exponential, was still pointing at 225.70, which is also a value still being enveloped by the UFO in the context of a climate which was 2 candles out of 9, right? So again, we were entering at the right time, using the right UFO, located at the right place based on our reference value. Okay, and the next day, if I'm not mistaken, I'm speaking out of memory because it's obviously many trades, but I believe I am right, and yes, I am. So you can see how on the 13, okay, price came into where the UFO was. The on-field orders got filled, okay, and that's why the UFO is gone. But and that's the reason why I also draw the dotted line, so you can, you don't get lost when I do this type of explanation. So you know where the entry was, 227, the dotted line, isn't it? And from there, if I now go ahead and fast forward to today's date, so we are in a nice one, with lots of movement in our direction. Now, remember, that stock, it's very likely going to start making all-time high. So we said trailing stop to maximize the profits. Okay, so your stop should be located at least, okay, under 232. By the way, the entry was identified using pre and post market data here. Okay, so in the pre and post market data, the UFO that we see is down here. So the reality is that we don't have a UFO that we want to rely on for this trade. And given the fact that the climate is still 6 out of 10, so there is no real need to be that concerned about this market going against us all the way. I mean, could that happen? Yes, especially given the condition I described earlier in the market, where the S&P is already hitting 12 candles out of what statistics suggest 11. So if the S&P gets tired and turns around, that stock is going to move down, right? So again, you have two ways to deal with this. Okay, in my mind, and as I suggest every single week, you would be running a diversified portfolio where you have some trades pointing to the long side, such as Roku, which is working very well. You would also have some trades pointing at the short side. And therefore, if that trade was to move against you, it also means that potentially other trades will be working your way. So you would have a hedge in your portfolio. And therefore, there is no need for you to do anything to this trade. Just let it do its thing. And as UFOs show up, trail stop, trail stop, trail stop. Now, let's say you are a trader with a much smaller account. You are not being diversified. You are taking one trade at a time, things like that. So then, given where we are at on the S&P, okay, while it's not ideal, I would indeed suggest to trail your stop under that UFO at 231, let's say 0.5, just to pick some random number. Because again, stocks are fragile, as we know, when it comes to the sensitivity to UFO, since they depend on other stocks and the sector and the broad market. So you may want to give a little breathing space, and maybe an okay way to do it is to go for 231.5, and you could set a stop there. So if that stock was to drop against you and hit 231.5, you're going to be out, and you're going to be out for a little bit of a profit. It's going to be very minor, but hey, if the whole S&P is going to go all the way against you, so you better get out for a small profit than a loss. And again, that would only be something that I would do if I was using one trade at a time, which is not ideal when trading stocks. As you know, I always talk about this, okay? But again, giving you choices depending on who you are and where you're at. And the last one I want to review is the Intel trade, okay, which is a trade, which that one, I need to go to the weekly time frame. Remember, this one is a long-term investment where we're doing a very fancy trade, looking at capitalizing on what the election had to offer, and in this case, it was a nice entry. So we entered when that stock was trading at 44.5. That stock is currently trading at 45.12. So it's not like it moved a lot, but this trade is indeed in profit. Okay, and if it keeps going, we're gonna profit very nicely. And if it drops, so we're gonna have that stock put to us at $40 per share. And that's what we wanted, because this was a long-term investment. This was not a quick trade. That was a long-term investment with Intel, and we guess that some of you at least probably are in this trade, given the fact that it was extremely beneficial given the level of premium prior to the election with 38% VIX. Okay. Cool. Okay, so this is all the review I wanted to do, and now it's time to get into trading. While I'm getting ready to start trading, please, guys, let me know if up to this point everybody's following. You guys are with me. Is there any question? Am I going too fast? Am I going too slow? Etc. Etc. Please let me know. Give me a little feedback there, and it's much better for me to understand where you're at. Okay, it's very very appreciated, guys. Anyway, so let's begin. Okay, and since we got Roku, which is a directional trade that is looking like it's going to last for longer, we got Merck, which is a non-directional trade that is expiring tomorrow. So my objective, we got 25 minutes left before the session is over. So my objective would be to at least plan a trade to take advantage of the market falling in case that happens. Okay, and I would like to look at my peaks here from the scanner, and also I would like to look at adding a non-directional trade because Merck will expire tomorrow. So then hopefully I can set another trade for the week after or the week after or something like that. Again, looking to build that diversified portfolio, which it's very difficult for me to do it here in the YouTube channel because we only meet once a week on the Thursdays, and therefore having only one day to have all sorts of trades in the account. So it's obviously complicated. The idea is that you replicate this process every day, and like let's say 2-3 times a week, you pick a trade, and once it's directional long, once it's directional short, once it's directional non-directional. And you keep doing that, after a month, you have multiple trades running in parallel, and that's powerful stuff. In my case, we are only meeting one day, and therefore, sometimes it's difficult, okay? But, definitely I'm going to attempt that, okay? Paul, I was you don't use a too far, too fast stop with options. I would, Paul, like I do with futures, if I was to take one trade at a time. But again, in the context of a diversified portfolio where you have debit strategies that always have and enjoy positive gamma, so I rather allow the positive gamma to work as how do I put it? It's a similar effect to a dynamic trailing stop, if you wish, because when a market goes against you, the positive gamma will reduce the pain. The speed of pain will be reduced, and when the market is moving your way, the positive gamma will increase the speed of profitability. So it's kind of like you're trailing stops in all your positions dynamically, while for sure you suffer time decay. That's why we also need to add non-directional trades to compensate that in our portfolio. But again, my assumption is that when trading stocks, because stocks are fragile, they are very dependent assets. Okay, the stock market is 3 times smaller than futures, and you got 9,000 stocks. So if I ask you how large is one stock, well, it's small, right? I mean, it's very nice products to trade, but they are small. So to me, trading one at a time, it's not the way to do it. Okay, so that's why I would not bother on being too aggressive on trading stops. I prefer to have positive gamma and have positions, hedging positions. That's a more efficient approach. Okay, but again, Paul, if you were to trade one at a time, certainly that is a valid possibility and nothing wrong with that. Okay. Now, I will not do a stop like a stop order because then you're going to get killed on slippage, especially if you do spreads or complex strategies. So, again, if you're going to be with positive gamma, I would, use hard deltas against soft deltas and hedge my trades, like it's explained in the playlist, in the sharpening playlist on our YouTube channel. You can look for videos with gamma hedge and you will be able to understand that better. Okay. Very nice. Okay, so let's begin, guys. So I'm going to start with non-directional trades, if that's okay. Again, I'm looking for non-directional trades as well as opportunities to make money on the way down. We'll start with NVIDIA. So NVIDIA reporting earnings on February 11. So we got plenty of time in front of us. Pending data, so I'm just going to wait until the data is fully downloaded. In the meantime, you know what, to save time, I'll click on Lulu as well. So Lulu starts downloading data as well as Okta, as well as WDay. Okay, so that way all those markets start downloading. So back to NVIDIA. So we got 48%, so that's good. I only have one UFO, that's not good. What about pre and post market? We got 47%. So pre and post market, I cannot rely on it. I need to deal with regular session, and if I look at regular session and I look at the monthly time frame, that stock is making all-time high, and because it's making all-time high or about to make all-time high, and we only have one red UFO, then we cannot set up a non-directional trade because we have a condition which is at least 2 red UFOs and at least 2 green UFOs for a non-directional trade. And obviously we are missing at least 1 red UFO. Okay, so we go for Lulu. My pleasure, Paul. I'm just looking at your answer. Absolutely my pleasure. I love it. Your questions denote your engagement, your commitment to practice. You're putting time and effort, and I just love it when you guys ask questions. So keep asking questions, my friends. Pre and post market, we got 39% for Lulu regular session. We got 46% for Lulu. We are going to pass. Our requirement is at least 48%. We don't have that, so we pass. Octa, we got 53%. That's very, very nice. With regular session, pre and post market provides 40%. That is not acceptable. So we come back to regular session. And again, my concern is given what's happening in many of the markets out there. So are we making all times high? And yes, indeed we are. So again, the setup for NVIDIA or Octa is basically the same. We're looking good, but not enough red UFOs. So we cannot do non-directionals. What else do we have? WDay, we got 45%. That's not good. If we look at pre and post market, that's 36. That is not good. So we're gonna move to Abbott. See what's going on with Abbott. 42% on the pre-post market. Regular session is providing 52. That is good. And we have UFOs above and below. Even though, where are we at? Again, also making all times high. And my friends, we're gonna pass. And let me tell you why we're gonna pass. Because again, while we have 2 UFOs above and 2 UFOs below, well, if I was to do a non-directional trade where the top of the range is here and the bottom part of the range is here, I guess it's pretty obvious that we are far from the center part from this potential range. And this is the ideal place where to start the trade. So that way we are equal distance from the extremes, and therefore we are maximizing the theoretical amount of time to stay in the trade before being proven wrong, and therefore the accumulation of time decay is also maximized. So we are too close to the top. So Abbott, you can watch it. Maybe the market is gonna fall, and maybe 1 day, 2 days from now, it's somewhere much centered, but not yet. So we move to NTES. We got 47% there. That's not good enough. Pre and post market, that's 35, not good enough. ATVI. So with ATVI, we got 43% on the pre and post market, so that's not good. Regular session should be good, 53%, that's great. And and here we got UFOs above and below and plenty. And my only fear is the earnings date. So let's take a look at the earning date. And the earning date is February 4. So we got plenty of dates in front of us to do a non-directional trade. Okay, and we did one. You can see the drawing I have here from a prior time. So we did one some time ago, which actually more than one. I remember multiple trades on ATVI that actually all work well. It doesn't mean the one I'm about to plan will work well. Losing is part of trading, my friends. Okay, for the ones of you that are new to trading, make sure you keep that in mind. Okay, because sometimes we forget. We are so confident. We are so proud of our trade plan that we forget we could lose. Okay, so make sure we all realize and remember that losing is part of the game, and therefore managing the risk is key. But having said that, definitely happy to re-encounter ATVI in our scanner, since we had a bunch of profitable trades in recent times, and earnings being on February 4 allow us to go ahead and take a look and see if we could put a trade in place, especially given the fact that probabilities are more than 48, 53% in this case, and therefore we have a green light to type ATVI and go ahead and attempt an iron condor and see if we get a full green light or we don't. So today is November 19. Doing this trade using November 20 could work if volatility conditions were very, very exaggerated. I don't think so. And therefore, in order to not to waste time, I'm just going to move to December 4 directly, okay, and start from there. Sorry, November 27, I meant to say, and start working from there So that way, we have a bit more premium built in, and hopefully we can then find the setup that we need. So notice I just clicked in a random strike selection. The one thing that is not random is I did select November 27. The strikes are to be adjusted. Forget about it. What we care about now is from now until this date, what is a 1 standard deviation above and below current price. That's what we care about, so we can have a measurement instead of a subjective impression based on what you think is going to happen just because you feel it, which is it's a human thing, but it's certainly not the way to trade. So we are projecting a 1 standard deviation above and below, which is an objective way to understand what's possible. Okay, so 72.82, that's what statistics suggest when it comes to how low that stock would tend to go from now until the next week, the next Friday. Okay, and that's there. And then the upper part is, so we got 72.82, and the upper part is 80.3. So 80.3, it's more or less here. Okay, so in other words, if I was to set a statistical, if I was to set my range, my proper range with the UFOs, I would look at those dotted lines. I know my final line needs to be beyond the dotted line, and I need to encounter and be able to count at least 2 UFOs on the way. So this is UFO number 1, this is UFO number 2. We are beyond that line, and then if I do the same below. Okay, so I start from where the price is and I go down, and now I'm beyond the dotted line, and this is 1 and this is 2 UFOs. So that's where my line will go. Okay, so we're talking about 80 and 68. And well, I guess you are thinking about it, isn't it? You guys are thinking, hey, Jose, wait a minute, isn't it that we are way too close to the top than the bottom? And the answer is yes. And one way to look at this, which is quite visual, is just to draw a vertical line. And I like to make it thicker so it's clearer for you guys. And so this vertical line represents the vertical distance from the current price to the bottom UFO. And if I project this above, okay, so notice that, it's way past the UFO I was pointing at, and therefore a way that is a bit more reasonable for me to do the trade, which I'm not going to be perfectly centered, but that's difficult many times. But, certainly now I only have this tiny deviation there. So it would be to point at the next UFO. So I will have 3 UFOs above and 2 below, which is fine. The rule is minimum 2. And then the one above will be 83.5, where the one below would be 68.5. So now, question is always the same. How much I get paid for the 83.5, right? We always start with the calls because the calls normally carry less premium. So what did I just say? It was 83.5. So 83.5, I need to load more strikes. Okay, so I'm going to load 40 strikes. And if we go to 83.5, notice how the next week expiration date is only paying us 14 cents. And that is, my friends, not acceptable because our rules say that we need a minimum of 35 cents for the options that we sell. So what's the solution? Well, the solution is to go to December 4, and see how much I get paid for that one. And notice I still being paid 18 cents. Okay. Now, is this an anomaly? No. And yes. Well, the anomaly first is that notice how the liquidity is problematic. And this is something that we see often, that the strikes which are 0.5 often have less liquidity compared to the round numbers. Notice that 23 to 30 carries 7 cents of slippage, where 6 to 30 carries 24 cents of slippage. Okay, why is so crazy? Okay, because we actually got the same price there, 30, right? So, well, because that strike is not so liquid, and it's a weekly expiration date, it's not the next week, it's the week after. So again, notice how many contracts have been traded today for those strikes, 3 contracts only. So again, we are lacking liquidity, and this is really hurting the midpoint, putting on the side that even if you go to the prior one, we are not meeting 35 cents. So that is a sure thing. It's telling you, you have to go for the next one, which is December 11. So let's check December 11 and see how much we get paid now. And now we get paid 45 cents, which is much better. But I am really, really uncomfortable with the liquidity condition here, where you can see the slippage here. It's really humongous. If you wanted to exit this trade manually yourself, good luck to exit the trade, because the only way to exit the trade would be to suffer that slippage. And therefore, a lot of your profits may be totally eroded. when you try to exit the trade. Okay, Jose Carlos, how many candles are you loading? I'm going to show you that in a minute. It's 1,597. Okay, but I will show you that in just a second. Now, could you do 83 or 84? Yes, I could. Okay, yes, I could, but 83, it's a bit aggressive. And if I do 84 and then let's say do 84, 85, so I will be selling an option for 45 and buying an option at 38. So the net credit I would collect, it's really, really, really tiny. Okay, I would collect a very, very limited amount of premium, which may work, but I'm looking for a bit more quality here. Okay, so really the right approach, okay, is to use the monthly expiration option, which is December 18. I think we're gonna benefit from much better liquidity if we do it there using December 18. My fear is that because it's now 29 days, my fear is that we may have to expand the range more. Okay, so let's see what we got. Okay, and we'll see that we need to check things one at a time. So, well, first of all, notice that we don't have 83.5. Okay, so we got 82.5 or 85. So we will need to go for 85. Okay, good news, 85 is paying us 50 cents. Okay, so that's more than 35. So at least this opens the door to that. So again, before we spend more time on this, let's go ahead and recalculate using December 18, which is the monthly expiration, and see what are the new. Okay, I need to re-enter the whole thing because there are many missing strikes. So let's do it again. I'm just clicking anywhere, analyze and sell, Iron Condor. And now we have the new values being 69.70 and 83.68. Okay, so let's go for it. 69.69. You know what? It's still good. 69.69. It's somewhere here. Okay, and the other one was 83.71. So 83. That one is not. So 83.71. It's somewhere here. Okay, and therefore we cannot use that UFO. We will need to use that UFO, and that's, I believe, it may be a problem. I believe it may be a problem because that UFO is basically, it's not 85, it's 87.5. So how much we get paid for the 87.5? 32 cents, which is less than 35. Okay, so we just got killed there. So what do we need to do? Well, go for a next symbol. Okay, because taking this trade basically now, if I keep going, I'm gonna force it, right? And we don't want to bend the rules because bending the rules is a politically correct manner to say breaking the rules. So we don't do that. Okay, we just don't do it. Again, could it be that that stock now, drops a bit, volatility increase? It's a bit better centered, and now maybe you can do this range or something like that, and because volatility expands a little bit, so instead of 32%, you get like 35, 38%, and now you could do next week. Yes, that could happen. Okay, so watch it today, watch it tomorrow. I mean, the scanner will watch it for you if you rerun the scanner, so you can go back and check ATVI again. But if I was to do it today, I will be forcing it, isn't it? Because our rules are not met naturally. So we just don't do that. Okay. Jose, how many candles? As I said, 1,597. So you can see it right there. Okay, that's your answer. And we're going to go for run, which is the last stock I got in my list here for non-directional opportunities. So first we got 47.92. We need 48, so that's not good enough. It's very close, but it's not. And pre and post market is giving us 40, which is ending up invalidating the trades. So almost a trade with ATVI, but no trade for non-directional purposes right now. Based on this list, you can always rerun the scan. Remember, I always run the scans before the market opens. You could certainly go ahead and do that at another time, such as now, and you will likely get other opportunities. I would say not too many more, because this is looking for markets that are likely to remain sideways, and therefore not many things should change. But from time to time, you'll get a few more symbols, and from time to time, those few more symbols may be the one you were looking for the trade. Okay, so we got almost 10 minutes left. Okay, so let's see if we can find a directional trade pointing down to offset the trade that we have with Roku. Okay, this beautiful trade where Roku is up 0.8% up today. Beautiful moves. Okay, that's great. But what if it crashes, right? So let's see if we can find trades that could offset and benefit from that stock moving in our favor or changing direction thanks to a short position where both got positive gamma. Okay. So first of all, looking at Python, the first thing that I can see here, and by the way, that was very Spanish, isn't it, the way I pronounce it? PTON or Peloton. That was much more British English. So you could see how the climate is pointing at 8 candles where statistics suggest to the downside issued before. So in other words, that market has been moving down for way too long based on stats, and therefore, while anything could happen, it could keep going down. The reality is that it's more likely going to change climate going back up. Okay, so certainly we don't want to expose ourselves to a market which may turn against us. Okay, so we're gonna move to the next one. Okay, Zillow Group, and this guy, it's almost good. Okay, it's almost good, but remember, auto climate is an indicator which changes dynamically intra candle. Okay, intra candle, and the reason why I got Z in the list is because before the market opened, that was a valid candidate. But as the market opened and that stock is moving up in that fashion, okay, that stock is moving up very strongly. This is what technical analysts would call an impulse, right? So what this is contradicting some of the market data that AutoClimate analyzes, and basically it's having AutoClimate understand that, hey, wait a minute, while the directional component is to the downside, take it easy, be careful. The climate is not confirmed anymore, given the fact that we are getting an impulse to the upside. Impulses to the upside are normally found in uptrends, not down markets. And so we have an alert. Okay, we have a warning sign, a flag being raised at us, and therefore we're gonna pass on Z as a potential candidate to short. Okay. What about Datadog? Okay, well, Datadog, similar story as PTON. Okay, where the climate is confirmed to the downside. It's been 8 candles like that, but statistics suggest only 4. Okay, and it's been 8 already, so it's surpassed by twice the amount of time going down that it should have. And yeah, it's certainly a very powerful move to the downside, but again, statistics tell us careful, careful, careful. Plus, we see UFOs kicking in, and those UFOs are very high probability. So we better pass on shorting that stock. What about iRobot? Okay, so iRobot may be a different story, at least based on climate. We need to still see the probabilities for auto UFOs. But I'll start with auto climate. So with auto climate, this is looking good because we have a climate which is confirmed. That's good. It's been running for 1 candle, and statistics suggest it's going to be 6, or 6 is a normal thing to expect. In other words, this is the beginning of a down climate, and if we catch the trade, it would be nice. Okay. Now probabilities are 52%, which is beautiful, and unfortunately, the reference value it's in here. It's 77.36, and we don't have any red UFO at 77.36. The UFO we have is at 85. So I need to switch to pre and post market, and hopefully we'll find a UFO there. But no, not only we don't find the UFO, on top of that, we can see how probabilities are not good. They are not 50%. For directional trade, we need 50%. So keep that stock in mind, okay? iRobot, we do have the nice probability, we have the climate, we have the everything. So the only thing we need to see happen, and it could happen before the market closes today, or it could happen maybe tomorrow. So watch it. We just need a UFO to form here. Okay, and this could happen anytime. This could happen in 1 hour time. This could happen in whatever. So just watch it. We never know when a UFO is going to form, but when it forms, okay, that UFO there would probably be lining up with our reference value. And if that's the case, now you have a trade. Okay. Now, right now we don't have it, so that's going to be homework for you to watch by yourself. And then we got IQ, and to be honest, IQ and NLOK. I'm just going to say I will not be very, very keen on executing those trades. And the reason why is because of the price of those stocks, like $22 per share, $18 per share. It's very cheap. Could be okay for practice purposes if you wish, if you are starting learning to trade options and you want to take real trades with real capital and not to risk much. So then it's okay. But when you're trying to create some decent performance, again, the cheaper the stock is, the more the stock resembles an option, isn't it? So going to an extreme, if the stock was to be just a few dollars per share, then the stock is an option, and it doesn't expire. So why would you use options on a stock that is so cheap, right? So we lose a lot of the benefits of options trading when stocks become very cheaper, right? And again, I would draw the line on the sand at $15 per share. Below 15 is just like I would not even touch it. But even 22, again, is there and is there. So you could have some homework and some practice if you're in early stages and you have a small account and you want to use real little capital, real money in your initial practice as a new trader. So that's why it's there. But again, I'm not too excited, right? So in any case, I would have to say that climate is good. Okay, we got 2 out of 6, so that's good. Probabilities are not. We need 50%. We don't have the probability we need. What about pre and post market? We don't. So no matter what, IQ is to pass. And the last one to check before we conclude the session will be NLOK, where it's going to be a no-go. And the reason why it's going to be a no-go is, again, climate has been developing for 9 candles, and it's nicely confirmed to the downside, but probability suggests it's going to be 5. So it's 9 out of 5 means that, we've been traveling too long in that particular direction, and it's probably a situation which is not sustainable, at least based on probabilities. And we do have nice stats, by the way, 54%. And we do have 1942 is the reference value, and we do have UFOs at that reference value that are enveloping the EMS. So the setup is there. It's just that the market condition makes it a little bit too late to the party, if you wish. So again, the right approach, would be just to wait for that stock to do whatever it does, probably get congested or maybe a bit up or whatever, change climate from confirm to not confirm maybe, and then start moving down again, give you some red auto climate, which is confirmed, show you a new UFO somewhere around here, and then just wait for price to come to the UFO, and here we go. Now you're back in business, re-entering that market in a safer manner. So again, we need to use patience, as we know. It's certainly one of the most powerful characteristics of a good trader is to be patient, apart from discipline and emotionless, or you cannot be emotionless. We cannot be emotionless, but having control over our emotions is what I meant to say. And all of those are key characteristics. Okay, so be patient, guys. Today it's an example of we need to be patient. Notice how I didn't look at credit spreads, which there are some opportunities there. I didn't look at long opportunities where there are some, even though since the market has been moving up for a long time, I would expect you are already in long opportunities. And adding more now that the S&P is a bit exhausted, as we saw based on the climate conditions. So I would say it's not a very good idea. Okay, but again, for practice purposes, you have plenty of homework to be done with many other opportunities. But we are reaching not the top of the hour, but the ending time for the session, and it's time to say goodbye. And talking about patience today is one of those days where we have to use patience. Okay, we spend 45 minutes together looking for those opportunities, but unfortunately, the rules didn't allow us to click the button. And keep in mind, everybody, that not trading is trading. This is something that it takes a while to most traders to internalize and really understand internally, right? And be fully happy with it. Because as traders, we are passionate about it, and what we want to do is to trade. So when you spend time in front of your charts and you get no trade, you're gonna be like, oh my god, what do I do? And the normal tendency is to find an excuse, to break a rule and take a trade, and let's see what happens. And this is basically the recipe to build bad habits. Okay, so be happy when we have days like that. It's like I don't know, it's like you are part of a football team or basketball team or whatever your favorite sport is, but today your trainer decided to keep you sitting on the bench while the other team was playing, but today was not your turn. So it's okay. It's part of sports. You are not gonna be hitting the ball every time. It's not always the time to hit the ball. Okay, so everybody, approach trading professionally, guys. Right mindset, it's absolutely critical. Christian, how are you, Christian? How does tradestation generate the probability on the chart? Yeah, so let me show you a couple of things. I will answer this question very quick here. So let me go ahead and type our website. Or actually, I wanted to go to the YouTube channel more than our website. So on the YouTube channel, you have a collection of playlists, okay? And some of the playlists under sharpening, okay, on the YouTube channel, you got the sharpening playlist, okay, which I'm opening there, as well as if you scroll down, where is it? Yeah, where is right here. Yeah, that's what I'm looking for. Sorry, I got confused for a minute myself. So in this playlist where you have so many videos, right? If you search for AutoUFOs, okay, well, actually, better than that is to use calibration because all of those videos are called UFO. So if you look at calibration, okay, you got multiple videos. You got two actually to be precise that are UFO calibration. So you can watch those videos. Okay, one is from 2019, the other one is from 2020. They are both powerful videos. Even the one from 2019, I would recommend to watch both if you have time, because those videos will tell you more about how to calibrate the app. And how to calibrate the app has a lot to do with understanding that probability figure, how it's calculated, what does it mean, and most importantly, how does it adapt to you? Because as you change the calibration settings, those probabilities will change. Okay, so for example, I use 0.618, that's what I use for myself. By default, it comes with 0.5. So notice if I use 0.5, so instead of 50 something, it's giving you 49. So does it mean it's wrong to use 0.5? No. There are pros and cons of every calibration approach, and basically the calibration settings have to do with adapting AutoUFOs to your own trading style, meaning are you conservative or are you aggressive or are you anywhere in between? So to give you a quick answer to something that is a session for you to watch, because I cannot summarize it in 5 minutes, guys. I wish, but it's just too important for me to give you an incomplete explanation. So I rather point at those videos I showed you, Christian, so you can watch them at your own pace when possible. So the probability, what the probability means is how often when price comes to a UFO, for example, if price comes to the red, how often it turns and reaches the rival UFO, which is the green. Okay, or how often, if price was to come to the green, how often price turns and reaches the rival UFO, which in this case is the red. So how often that happens. Okay, and this is ignoring climate, this is ignoring time frames. So again, this is just for you to calibrate the app. Okay, it doesn't mean that you're going to make 54% profitable trades. Depending on the other rules of your methods, you may profit more often, you may profit less often. And also, a trading methodology is not only about how often you profit, it's also how much you profit when you profit, how much you lose when you lose, how many trades you run in parallel. So there are so many more components when it comes to how to trade. Is that making sense? But this probability measurement is basically telling you about how often prices bounces from the green and reaches the red, and how often prices bounces from the red and reaches the green, which is a very important measurement because it tells you about the institutional interest. Okay, for example, if you look at the S&P futures, which is a 24-hour market, right? So notice how this number is greater. Or you look at currencies. Let's say you trade Forex. Okay, so here's the euro, for example. So you got 56%. Okay, so now, okay, why is it that we have greater probabilities with those markets compared to, some stock? How much we got with McDonald's, for example? So with McDonald's, we're still loading PD, so we need to wait until it loads. We got 50%. Why McDonald's is only 50%? Well, my friends, we're talking about a market which is trading only 6 hours and a half a day instead of 24 hours. And on top of that, before the market opens every day, the large players in the market, they may decide, given the election, given overall conditions out there in the world, they may decide, given Burger King, in this case, they may decide, you know what, the orders I wanted to fill, to buy McDonald's, I changed my mind, I'm going to cancel them. And therefore the probabilities, that's what I mean when I say stocks are fragile. So that number is also kind of revealing the institutional interest that is happening on that stock or whatever product you trade. So again, I could talk about this for hours, which is what I do in those other videos, and it's quite critical that you guys watch it to have a better understanding, okay? But in any case, I need to be respectful with the timing of the sessions, and I surpass it by 10 minutes. So thank you guys for sticking with me. I love to see your commitment, and certainly keep up the good work and the passion. Trading is a beautiful thing. Count on us, guys. If you have questions, support@tradictiv.com, or you can email me directly to jose@tradictiv.com. We're here for you guys. Take care, stay safe, keep up the good work, be disciplined, don't break the rules, and of course, ask questions if you have, okay? We'll see you soon. Don't miss tomorrow, Solid as a Stock with Becky. It's going to be a great session talking about stock trading. So tomorrow, same time in the YouTube channel, we will see you there. See you around, guys. Take care, everybody.